Greece has to understand that the private sector is really the engine of growth. I've been in the investment business since 1970, so I've seen many ups and downs in the markets, and early on in my career, my father came from Vouvra, which is right outside Tripoli in the Peloponnese, in maybe 1916, and we came to Chicago, and I grew up in a grocery store, and my Greek heritage is very important to me. I think it's helped me over the years. I was the first of all my cousins and sisters and brothers to go to college. You know, we have very strong family roots, and you know, we're very proud of that. I studied and really focused on convertible securities, which is a complex security, and we've become experts in that particular area, and that really helped us leverage our business over the years to today we're managing, you know, $32 billion in investments. We have clients all over the world, and we do not only convertibles, but we do stocks, we do bonds, and we do global. So it's been exciting. It's been a very exciting.
Do you have any plans of maybe entering any other fields, even in going to production?
No, our focus is really all through the years. We've really focused on what we would call you know, leveraging our own talent within. So we've been able to take the convertible idea and go to high yield bonds, to equities, to defensive equity strategies. So we've been able to do that internally without going far afield, and we don't expect to do. We expect to continue to do that.
And let's go. How does this crisis has affected your business?
Well, you know, I think the way I look at what happened over the last few years is that we, you know, in most of the investment community, did not think that we had to be concerned about systemic risk. Systemic risk is a risk that the whole system collapses. And that was a risk that we did not think we had to be concerned about. We took that for granted, that the system would remain intact, that there would be business cycles, the economy would go up, it would go down, we would have recessions, but we did not have to be concerned about systemic risk where the whole system collapses. That's the one thing that we've learned from the crisis of 2008. And what we've learned is we have to be concerned about it. The global economy is very fragile. It's unbelievable that Greece, with 3% of the European economy, 3%, is a catalyst for people fearing systemic risk all over again.
Have you ever invested in Greece?
We look at Greece. We've had investments in Greece as we have in other parts of the world. We are counseling investors today here in the United States, for example, to think more globally than ever before. We are in a transitional phase, more than ever, going to a global economy, a global market. And it's very important that investors be able to invest in other parts of the world. Greece may be one of them. Not maybe so much today, but you know, hopefully in the future. The critical issue, as we all know, is the amount of debt that's been that Greece has undertaken. Much like other countries in the world, they've taken on too much debt, and to reduce the debt now, they need to raise taxes, they need to raise revenue. So they're like many of the other world economies. They're in this fix where at the exact point, the critical point when they should be encouraging the private sector, encouraging business, lowering taxes, encouraging growth, now they have to raise taxes, discourage growth, take away revenue from the private sector, and we have to remember that the private sector is what creates jobs. Greece forgot about that. They think the public sector creates jobs. The public sector has to take money from the private sector to create jobs. So Greece has to understand that, that the private sector is really the engine of growth. What the engine of growth for the United States has been its great middle class. The upward mobility. You can come here like my father did, you know, push a cart around Chicago selling groceries to the people in the alleys and doing that. He thought when he got his own store that was wonderful. Oh my God, I have my own store. I don't have to push a cart around. And that upward mobility, that's the work ethic, that upward mobility is what creates wealth. And that's what Greece has to understand.
How many years would Greece need to gain this lost trust?
Well, I don't know if, you know, I'm not a very good one to say what that timeline has to be, because it has to be a consensus of the people, right? It just can't, it's not a timeline, it's they need to accept that if they're going to increase the standard of living of everyone in Greece, they have to get the private sector going. That's what China's doing, that's what India's doing, that's what Ireland did, that's what Spain did, and Greece has to accept that as a philosophy, as a goal. You know, from what I'm reading right now, they have not accepted that.
How would you compare Greece's situation with California? Because there are people that have done that.
Greece and California are very similar. They have the debt problem. California is raising taxes. They're trying to handle the debt, and they get into this spiral where people are in California are moving out of California, because if you retire here in California and you look at the tax rate, where do you go? You go to Las Vegas. You go to Nevada. Why? The taxes are much more reasonable there. So we have more mobility than that, and that is really that's very positive, because that is a check on bad government policy. If the people can move and they can do other things, and the financial markets are a check on bad government policies. Greece makes a mistake on their bonds, and what happens? Money flows out of Greece. Investments flow out of Greece. People sell their bonds, the bonds go down, the spreads go up, and it says, I don't trust you anymore.
And
that's a check.
Right now.
That's a check on bad government policy. So the financial markets are actually a check on on bad policy, whether it's Greece or whether it's California or whether it's the United States or any country. So I think that's good, you know, because maybe, you asked me about the timeline, maybe because the financial markets are so active, that makes those governments refocus. What should we do? We need to do something right now, because look what's going on with the bond.
Mr. Calamos, thank you so much.
Thank you.